Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and I'm speaking today with Jordan Roy-Byrne, editor and publisher of The Daily Gold. We'll put a link to that down below the description. And Jordan, it's always great getting your thoughts on the markets. Of course, we'll probably dive into the precious metals after the bounce we've seen this week, following through on a pretty good move the last couple months, really, in the precious metals. It seemed like the big news that got things moving again this week was the Bank of Japan surprising the markets by widening their bond range and also stimulating and starting to help their currency, which caused the yen to really run higher against the US dollar. As the dollar sold off, most commodities and metals picked up, including the precious metals. Gold has had a pretty good run here up in the lower 1800s. It's at 1825 at the time of this recording. Silver is blasted higher above 24. What's your take on gold and the recent move we've seen in the precious metals?
Well, my take, at least in the short term, hasn't changed that much. I mean, if we're looking at focusing on the very short term, gold and silver, they're trying to make new highs. I mean, they haven't quite pulled away from the consolidations that they've had this month, although silver's been stronger than gold, which is a good sign. But on the other hand, if you look at the miners, like they're still below their high. So in the last couple weeks, the metals have been leading this move, which is not what you want to see. And obviously, gold is wrestling with the 200, the 400-day moving average. Gold's trading, I don't know, $10, $15 above those levels. So it hasn't quite broken away yet. If we're going to see another leg higher here, looking at gold, there's a lot of resistance around 1840. I think it's a 50% retracement of the entire correction of the cyclical bear market. And going back to the beginning of this year when we had the Russia move, I remember 1835, 1840. I remember talking about that as a real significant level. So that's one level to think about for gold. And then for silver, I know that there's quite a bit of resistance at 26, but also if you look at the weekly chart, it comes in the high 24s. The weekly chart, there's a lot of resistance there. So, I mean, I like what's been going on. I don't see a ton of more upside potential here in the short term, but I would like to see the real key is if we are going to see the stock market begin a new leg down and if it's going to discount a recession coming in the next couple of months. I think that's the real next big key for precious metals. But, for short term, short, medium term reasons, but also in the very big picture, that is just going to be really significant and really bullish if we see the stock market start to roll over again and lose 3,800, the 40-month moving average, and then have to test, 3,600, 3,500 again. That to me would be very, very bullish for precious metals. So I'm a little antsy to see if that's going to happen here in the next couple of months, or if it might take a little bit longer.
Well, let's talk a little bit further about the short to medium term, and then we'll branch it out and talk more long term after that. But just in the short to medium term, Jordan, one thing that has stuck out to me, and I know we've talked about this for a few months now, is the non-confirmation bottom we saw back in September with both silver and the mining stocks. Silver bottomed at 1740, and it's ratcheted higher through several resistance levels, and is now over $24, well above some of the levels people wanted to see it make. And what was interesting was the mining stocks started really moving, especially the producers, the mid-tiers, the majors, some of the royalty companies started moving in mid to late September, and they kept moving higher even when gold was still trying to find a bottom. If people remember, gold didn't bottom until November 4th at 1618, and then it quickly ratcheted up and added $200 onto that to get above 1800 again. But it seemed like it was positive and constructive that silver and the mining stocks were still blasting higher while gold was trying to find its footing. And now, a couple months later after that, we've still got some pretty good levels. But to the point you made earlier, it doesn't seem like the juniors or the sentiment in the sector or, a lot of the mining stocks, they just haven't kept up with the moves in the metals. And it doesn't seem like, in talking to people week after week on the show or to companies or to investors, that there's people that are that excited about this move. Does that give you pause that maybe the mining stocks are telling us we're going to see these metals prices roll over as we go into the beginning of the year? Or how are you reading the sentiment right now?
Well, I think looking at technical analysis just by itself, I mean, you can make a really strong case that gold and silver, they've put in a major bottom. The bear market, cyclical bear market is over. We're in a new cyclical bull. It's going to, it might take a little time, but I do think we're going to confirm that we're in a new secular bull here in the next, 2, 3, 4 months. But I think with the sentiment that you're talking about, anecdotally speaking, and you always have to be careful about anecdotal sentiment because it is anecdotal. That's more subjective, and I always like to focus on objective things. And just to step back for a second, I don't mean to change my thought, but if we're looking at sentiment, I mean, remember the net spec position in silver was negative, which means the speculators were actually net short. So silver had, I believe, its second lowest or second best reading ever in its history around the bottom. Gold didn't, the net spec position didn't quite come down as much as I wanted, but that's fine. If we're looking at public opinion, I remember looking at Sentiment Trader and smoothing their data with like a 20 or 50-day moving average, and using those moving averages, their data came basically down to where it was at other major lows. So you had, not only do you have the technicals making the argument for a major bottom, you had enough sentiment indicators doing so as well. So shifting back finally to the anecdotal evidence on sentiment, and I think that it kind of reminds me, and this is a little bit before my time, but I think it's similar to what happened after the gold stocks bottomed and gold bottomed in 2001. I mean, it really took a couple years for people to really wake up to the fact that gold was going up and then even care about it. So I think we're seeing something similar. And remember back then you had the S&P, you had the tech bust, you had the S&P going into a secular bear market. So I think we're seeing a lot of similarities to that. And I think, this has been a nasty cyclical bear market in the sector. And so I think that's hurt a lot of diehards. And you had 2011 to 2015, which was, that washed out a good chunk of people. And then, we had several fits and starts since 2016. And true, the metals and miners, they are higher than where they were at that point. But I mean, the cyclical bear of the last 2 years, I think, was really nasty. And I think that has washed away, another chunk of people. And I just think a lot of people have given up on the sector, and that it's going to take a significant amount of time for, number one, to get all the diehards back. And then secondly, on top of that, to have generalist money coming in. But the good news is the precious metals have had a pretty good move in the last couple of months. And so it's fine that sentiment is where it is. The market can continue to move. The sector can continue to move higher, without sentiment, especially anecdotal sentiment, starting to become more bullish and bullish. I mean, it might take another year or two for even the gold bugs to come back. I mean, who knows? So to me, it just reinforces that I think we're at the start of a new secular bull, and so it doesn't bother me. I don't think we need to see all these people, all these diehards come back to confirm that we're in some new bull market. I think it's repeating what happened in the early 2000s.
Well, Jordan, I think this is an interesting topic and point because when you look at sentiment, when you look at, really the last decade, it's been rough for precious metals investors. Every time there was a glimmer of hope, the rug got pulled out from underneath their feet. Every time there was a rally, it only lasted maybe a few months before it reversed back down. And while there have been some really nice moves, some epic moves where there was multi-bagger returns, they were short-lived, and if people didn't trade in and out of those correctly, they either got stuck holding the bag or they missed the move completely because they were on the sidelines. So let's zoom out now to a bigger, longer term picture of how you see things unfolding in 2023, 2024, and what it will look like when we enter a true secular bull market. We were talking a little bit before recording about how, while in nominal terms, the mining stocks are up and the metals are up compared to where they were a few years back, we still haven't seen that real bull market start. So how do you see things unfolding as we maybe move into this real secular bull market?
Okay, well, I think, and I wrote about this last week, there's a couple of very important things people should watch for. Number one, watch for the S&P 500 to break below the 40-month moving average, which is around 3,800. And, it might take a month or two for this to really be confirmed. So that's the first big thing for a secular bull market in precious metals. And by the way, if you go back and you look at when this happened, I want to say 2001 and 1970 or so, the last two times this happened, after the stock market had been running up for over a decade, that to me, I think is exactly when you had gold bottom, or it was really, really close to that time. So that's not only is that a significant marker for the S&P going into a secular bear, and it's a significant marker for gold going into a secular bull, but the performance of gold really picked up, and gold stocks as well. It really started to pick up after that happened. So that's the first thing to look for. And, let's assume that happens in the next couple months. Precious metals should pick up even more, perform better. And then I think either by the end of this year or at some point in 2024, you're going to see gold break out and make a new all-time high and finally have that massive breakout. And that's really significant because if we're stepping back and we look at the S&P and gold has really only had two major breakouts, in my opinion. It had 1971 when it, broke away from the $35 an ounce where they finally let it float. And then to me, late 2005 when it broke, it had a downtrend for 20 plus years, but it had rallied up to the line so many times. I mean, you could also say, when 2008, when it broke above 800 or whenever, or when was it, 2009, late 2009, when it broke above 1,000. I mean, those to me were not as significant as a 2005 breakout because that really kick-started it. And that was a level that it had tried to break out from numerous times. So, and if we go back, we look at the S&P, the huge breakouts in the S&P or, U.S. equity markets, 1951, 1982, and then 2013. What happened to gold and commodities around that time? 1951, gold and commodities peaked in 1951. 1982 was, 1 to 2 years after gold commodities peaked. 2013 breakout, 2 years after gold and commodities peaked. And so when we look at what happened with gold and those breakouts, gold's breakout, I think, was at the end of 1971. So, that came roughly a year or so, after gold broke below its 40-month moving average. And then because gold was so depressed in nominal terms in 2000, it was 5 years after, or 4+ years after the stock market peaked that we had that major breakout. So what I'm getting at is the first key event, you have the stock market losing the 40-month moving average. And then what's going to come after that is you're going to see gold breaking out, making a new all-time high. And so I expect that's going to happen at the very end of this year or, early 2024. So that's really the next thing to look for. And, when you get into a real bull market like that, in a real secular bull market, you're going to see consistent gains for years and years. And so we haven't seen that. I mean, you could say, 2016 to 2022, gold has done well. But if you look at where silver and the mining stocks are right now, you look at the points when they've went up, as you mentioned, I mean, they only went up for, 3 or 4 or 5 or 6 months at a time. So in a real bull market, you're going to see sustained gains over a number of years. And so I think that's what we're going to see. I mean, at least over the next, let's just say 3 or 4 years, we're probably going to see consistent, steady gains and, some really huge gains are going to build up over the next 2 or 3 years, especially because at the same time, gold is breaking out. It's going to break out above 2100 or 2050, wherever it is. After that point, it has a measured upside target of 3,000. It has the log target, which is pretty close to 4,000. So, if I'm right about that, we're going to see some really spectacular gains over the next 2, 3, 4 years. And, you'll see huge moves in silver and the mining stocks as well. Of course, they'll be much bigger than the gains in gold, but that's what you're going to see. It's going to be a real bull market and not like what we saw in 2020 or 2016. You're going to see these huge gains and they're going to be sustained.
Well, Jordan, just one more point on this for this long-term vision and when we get into that real bull market is a lot of people are always dithering about when will the generalist investors come back? And to your point, I think we don't even have most of the diehard precious metals investors or resource stock investors in right now. They have gotten sidetracked in other markets over the last couple of years, or they've been disappointed with the way that things worked out in this space. So it'll be kind of two waves. At first, we'll get the precious metals and resource investors in for the next wave higher. And then after that, it's probably going to be a while before the generalists even get that excited about the sector. You had mentioned last week briefly a discussion to have with Mike Swanson and some of the information he had seen in a previous cycle. And I think that's relevant to bring up again here for investors that missed that, just that there's a lag factor as far as when generalists get in. I'd love you to recap that again.
Yeah, so Mike Swanson had, I believe, a small hedge fund. He was really successful in the early 2000s because he got into gold stocks really, really early, and of course, rode it for years and years. But his point was, even back then, his main point was that the generalists, they didn't even come in until really 2003. And so it's interesting because the generalists came in so late, and they didn't even come in until after the S&P had already bottomed. But of course, they didn't even, they obviously didn't know it at the time. It was such a bad bear market that their sentiment was, warped. It could take a long time for that to change, as we are seeing in our sector right now, where precious metals have bottomed, they're moving up. I mean, there's potential for some huge developments that I've been talking about here in this interview over the coming months. And, the diehards are stepping back. So it's just interesting how the generalist money did not even get into the sector until 2003. And that was 2 years after gold had bottomed and more than 2 years after the gold stocks had bottomed. I mean, after that point, the gold stocks were up significantly. I mean, they were probably up tripled by that point. I'd have to go back and look at the Huey. But that was his point, because first I was saying to him, well, they're all going to come back when gold breaks out and makes a new all-time high, when it's trading above 2,100. That's when everybody's going to come back. And he's saying, no, it's going to take longer than that for the generalist money to come in. And so then I was talking to him, and so I kind of developed the thought that, okay, well, we'll see the diehards come back first. And so looking at where gold is, 1825, 1830, wherever it is, it's not that far away from 2050 or 2070, wherever the new all-time high is. I mean, what is that, 12, 13%? I mean, it's not that far from making a new all-time high. And so maybe even the diehards are not going to come back until we see gold reach 2000 and being on the cusp of finally breaking out of that long base. Maybe that's when the diehards will really start to pile back in. And so it could take time. It may not be until, well after the major breakout that the generalists come in. Because if you think about in the last secular bull, it took at least 2 years for the diehards to really come in. I mean, we're only, if you look at when this sector bottomed, we're only 2, 3, 4 months since that bottom. So I'm not saying it's going to be exactly 2 months till they come back in, but it may not be until, if gold's going to make its major breakout at the end of this year or early 2024, it might not be until, who knows? I mean, it might not be until 2024, late 24, when we start to see the generalists come back in the market.
Well, Jordan, we'll wrap it up on that thought, because I guess for anybody listening to this interview, which would be the uber diehards that are still around listening to resource stock investing talks, that presents an opportunity, because it means that the masses of resource investors, the people that will eventually flood into the PDAC in a couple of years, are not even in the sector right now. And those positioning now, when we do see these really low valuations in the mining stocks, as long as they are patient and have the right time horizon, will probably be well fit for a nice run higher before all those resource investors come back in. And then after that, when things have really moved in the sector and it's become more obvious to the mainstream financial media, there's still a whole other wave of generalists that won't get interested until things have moved up substantially from where they are now. So that's something that's, I think, encouraging for investors to hang their hat on that are looking at the sector now and have a 2-year, 3-year time horizon. So always appreciate getting your thoughts, Jordan. Great having you here on the KE Report, and looking forward to talking to you again next week.